Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin through the lens of gold. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we've done this series a little bit recently where we talk about what is the valuation of Bitcoin against things besides the US dollar. And if you think about it, why should you value something against the US dollar since the US dollar depreciates all the time? I think a lot of people sort of assume that the US dollar is just this stable thing, but it's not. And this last year has proved that with the fact that inflation is now at 7.5% year over year. And a lot of goods and services cost significantly more than that when compared to a year ago. So I thought it would be useful to talk about what is Bitcoin valued at with respect to other assets. So yesterday we talked about it with respect to the NASDAQ. Today we're going to take a look at Bitcoin's valuation with respect to gold. Okay. So one thing to look at briefly before we jump into that is just to look at where Bitcoin is. And you see the general chart for Bitcoin. It generally trends up with time, arguably best modeled with logarithmic regression bands. Okay. And if you look at the fair value, you can see that Bitcoin more or less just oscillates from being overvalued to being undervalued and back and forth and back and forth. And if you look at gold, recently gold today has broken out a little bit, right? A very crazy, mind-melting 1.75%. What a lot of Bitcoiners would call a Tuesday is now a fairly good day for gold. Now, I say that, in jest, but in all seriousness, perhaps it is finally having some type of a breakout. Okay, I don't know. I don't really look at gold that much, but it is sort of slowly breaking out here to the upside. I mean, I think that when you think about gold as a long-term investment, you really have to have, when I say long-term, I mean really long-term. So if you're holding gold, then with Bitcoin, you basically have to think about it as holding it for a few years. With gold, you more or less need to think of it as holding it for decades. Okay, I mean, because gold was actually at this same price a year ago or a decade ago, right? Oh, more than a decade ago, gold was at the same price that it is today, and that doesn't even include inflation. So you have to take it for what it is. So when thinking about gold and thinking about Bitcoin and thinking about, well, how are they valued with respect to one another, what we can do is we can take the valuation of Bitcoin and divide it by the valuation of gold, and you get something that looks like this. Now, there's something interesting about this chart. All right, so let's think about this for a minute. This is the Bitcoin USD chart, or sorry, this is the Bitcoin valuation against gold. This is Bitcoin against the US dollar. Okay, so Bitcoin gold, Bitcoin US dollar, Bitcoin gold, Bitcoin US dollar. Did you catch anything? Yeah, I didn't either. The reason is because the valuation of gold over the last 10 years, or let's say over the last 12 years or so, basically ever since Bitcoin's been trading on the markets, the valuation of gold has been so negligible that when you take the price of Bitcoin and divide it by gold, qualitatively, it looks the same as if you valued it based on the US dollar. I'll say that again. The valuation of gold, the movement of it, the volatility of it, what has it done over the last decade? It's so negligible that when you take Bitcoin's price and divide it by gold, the price of Bitcoin, it looks the same as if you're valuing it from the US dollar because gold has basically done nothing for the last 10 years. All right. So I think that's something interesting to note. Now, I do understand there's probably some people here who really like gold. And to be completely honest, I have a very, very, very tiny amount of it. So for full disclosure, I do own a little bit of gold, but I can also poke fun at it because I own significantly more Bitcoin, and I realize the risk-adjusted returns with Bitcoin far outweigh gold. And so I do think it's important to sort of put things in perspective. I will also say this. One of the things we notice is there's a lot of people that are basically, they swear by gold, and they're never gonna not own gold no matter what. And I think a lot of it is because, it's due to what's happened in the past with gold. When it went on these crazy rallies in decades past, like we saw in the early 2000s, and it lasted for about 10 years. Could we be in the middle of another one? Well, it's possible. I mean, if you take say like a bar pattern and kind of overlay this bull run that gold had with, say, maybe a potential current one, yeah, it's possible that we're doing something like this again. Right? It's certainly possible. And it's because of that I have a small amount of it in my portfolio. But with that said, this time horizon is a long time. I mean, you're talking about from here to this peak, it was a decade, more than a decade. Okay? And then to get to from this peak to where we are today was another 11 years. So while it is certainly possible that your portfolio could trend higher against time, with gold, you're going to have a lot more gray hairs by the time it probably gets to the same valuations that you probably could see with things like Bitcoin if you're just patient. So what I want to do is I want to really hone in on Bitcoin's gold valuation, and then we're going to talk about Bitcoin versus with accounting for M2, and also gold with accounting for M2. So if you look at the Bitcoin gold valuation, one of the things you'll notice, and I actually find this somewhat interesting, is that when you look at it like this, it was basically the same valuation from April of 2021 and then November of 2021. Okay, so we know technically Bitcoin went to a new all-time high back in November. When you value it with respect to the NASDAQ, Bitcoin put in a lower high by November. When you value it against gold, it was basically the same price, okay, 2 months later, or half a year later. Furthermore, we actually had 2 wicks to the same price, occur to the same valuation of Bitcoin against gold. But furthermore, right now, it's hard to know how we draw this bottom line. Is it straight across, right? Do we have to come all the way back down to the bottom and then bounce off of it? I mean, we could go below it as well, all possibilities considered, right? Is it a sort of a slow uptrend where Bitcoin's gonna, slowly come back up to the top and then break out? We don't know yet, right? We don't know. What we do know, again, is that the valuation of Bitcoin has significantly outperformed gold, so much and so that it's completely indistinguishable for the most part, when you compare it to Bitcoin versus the US dollar. Now, one of the things I wanted to mention is that when you think about something trending up with time, I think it's also important to account for the money supply. And to say, well, look, if there's more dollars in circulation, you should expect prices to trend higher with time. And if they don't, then, what do you have in your portfolio, right? Like what are you really focusing on in your portfolio? And that's why I think that, precious metals, while you could argue they hold a spot in anyone's portfolio, I do think it should be a relatively small amount. This is not financial advice. This is my own personal opinion. So what happens if we go look at gold divided by M2? You get this. So what I find interesting about this chart, when you account for the money supply, gold is nowhere near where it was in 2011. So the bull run that you see that gold has been on since 2011, it looks like, okay, it's at the same price. But actually, when you account for the money supply, look where it is. It would need to pump how much? 137% just to get to that same valuation. When you compare that to, say, Bitcoin divided by M2, what do you get? You get a very different chart, right? One that generally increases with time. So, Exhibit A, Exhibit B. I prefer Exhibit B, to be completely honest. Maybe that's just me. Of course, not everyone likes money, of course. But when I look at this chart, I have to say, gold's valuation, when you account for the money supply, looks abysmal. I mean, absolutely abysmal. That's not the only thing. I mean, a lot of charts look like that. For instance, if you go look at, say, let's go look at say, SPY divided by the money supply. What do you get? You get something that doesn't really look that dissimilar. Bitcoin divided by the money supply gives you a completely different story, right? It generally increases with time. Furthermore, we also can see that when accounting for the money supply, Bitcoin has already tested its 2017 all-time high back in the summer. And it almost tested it back over here just a few weeks ago. So one of the things I want to mention here, as always, is, if you like gold and you have it in your portfolio, I honestly would expect it to trend up with time, but that doesn't necessarily mean it's outperforming inflation. It doesn't necessarily mean it's outperforming a lot of other assets. And you probably will have a lot more gray hairs by the time it gets to the valuations that you're shooting for. With all that said, as I said before, I actually do have a very, very tiny amount of gold in my portfolio, but it's more or less just a hedge, against other things in my portfolio that are much larger percentages of my portfolio. So I got to look at this chart and say, you know what? While gold is something that has moved today, and it's moved by about a little less than 2%. In the grand scheme of things, what has it really done, right? What has it really done except bleed against Bitcoin, not even keep up with inflation? I don't know. I mean, to me, it doesn't really seem like it's done that great. Furthermore, the risk-adjusted returns for precious metals in general are a lot worse than crypto. They're also a lot worse than the stock market. So this is one of the reasons why I don't really talk about precious metals that much on the channel. It's just because I just don't think that the risk-adjusted returns are quite there. With that said, I will acknowledge a couple things here. If gold is in a decade-long bull run, then congratulations to everyone who's super heavy into gold. And furthermore, I also try to understand why people get attached to these things. And I think a big reason is because a lot of people experienced this bull run over here, and so they're thinking that we're in another one, right? Like that we're just in another potentially macro bull run here for gold. And one of the things I can't help but think is that the gold investors of today, we're probably going to be like them, but with Bitcoin in the future. So I fully recognize that. If you think about it, like all the investors who hold gold today hold it because they've seen these crazy bull runs that gold has experienced in the past. They've seen this stuff, right? I mean, they saw this crazy move here by gold, and they saw this one as well. And so for them, it's just a matter of time, right? It's just a matter of time before it does something similar once again, and they're fully happy just sitting on it and waiting as their store of value. I think there is a good probability that us Bitcoin investors in 30 or 40 years are going to be the same, doing the same thing, right? We're going to be saying, Bitcoin is the best, and no matter what, Bitcoin is the best store of value, even if there are new projects that are giving higher gains. I do wonder if a lot of us will fall into that same type of camp a few decades from now when we've experienced an asset be, capitalized to extents we never believed possible. So if you're along for the ride, I think it's easier to hold on to something. If you're kind of coming in late, it's like, what's really the point? It's like when you buy an altcoin and you want to see that altcoin go up, and if there's another altcoin, you don't really care if that one goes up because you didn't get into that one. I think the same thing could be said with a lot of gold investors. A lot of the gold investors today, I imagine, have been around for this run and maybe even this one. I don't imagine there's a lot of newer investors in the space that are getting into gold, basically because really over the last 10 years it hasn't done anything except not even keep up with Bitcoin and against the money supply. This is the S&P against the money supply, but gold against the money supply still looks pretty abysmal. So I do think that looking at valuations of Bitcoin with respect to other things besides, say, other cryptocurrencies, but looking at it with respect to, say, the NASDAQ, maybe the S&P, with respect to gold, with respect to other fiat currencies like the euro, I think they tell an interesting story. And I think it's at least worth looking at these things to see kind of how they stack up. And that way, once you have all the information, you can make your own decision, okay? If you would prefer to put more of your eggs in the basket of something like gold where it's relatively slow, but it's not necessarily going to drop 85% after a major crash, then more power to you. If you prefer the volatility of Bitcoin, but generally thinking that it's going to yield better returns as long as you can ride out the volatility, then more power to you. There's not really one solution that's going to fit every single investor. Let me know what you guys think about this analysis when we value Bitcoin divided by gold. Thank you guys for tuning in. Subscribe. We have the premium list at intothecryptoverse.com. I'll see you guys next time. Bye.